And hold on, I just want to do one thing. I want to unplug my others. There we go. All right. All right. So with this slideshow, I am gonna introduce the agency. I'm gonna do a review of Medicare, talk about the Medicare supplements, long-term care, some disaster preparedness information, water damage and flood insurance, and a little bit about insurance fraud. And so who we are and what we do. The Maryland Insurance Administration is the Maryland state agency that regulates the business of insurance in Maryland. And so that means that we license the insurance companies to operate in Maryland, as well as we license the insurance producers. And when I say the insurance producers, I mean the agents and the brokers. We examine their business practices to make sure that they are compliant with Maryland laws and any other laws that they need to follow. And we monitor the solvency of insurance. So that's a really important thing. That means that we make sure that the insurance companies that operate in Maryland have the money to pay your claims. And so we're monitoring solvency and attempting to reduce bankruptcy within the insurance industry. We review and approve the insurance policy forms. And so that is the policies that are issued to you are reviewed in our office to make sure that they comply with the laws. And we review insurance rates to make sure that they are not inadequate. So that means we need to make sure that they're not charging you too little, and so they go out of business or they're not able to pay your claims. However, that what they're charging you is not excessive or unfairly discriminatory. And then we investigate consumer and provider complaints. And so that means you have a problem with an insurance company. Say you have a claim that's in progress and you're having an issue with that. You can file a complaint with us and we will investigate it. And any issue that you have, you can contact us and potentially file a complaint with us and have us investigate the situation, as well as complaints against agents and brokers, and allegations of insurance fraud. There is a video here. I'm not going to show the video. We have a YouTube page. So Maryland Insurance Administration has a YouTube page, and there's a lot of really kind of cool videos there. I write a lot of them. I don't produce them. And so, again, like these are just examples of reasons that someone may file a complaint with us. If you have a claim that you believe has been improperly denied, so they've said, nope, not paying it. And you say, no, I'm going to the Maryland Insurance Administration. And so we can review it. And, again, it could very well be that denial was legitimate or not. If they delay payment, you can come to us as well. Payment for the claim, payment for all the claim portions of the claim. If they improperly terminate your insurance policy, so you believe that your insurance policy was improperly terminated, you can come to us. If you received a insurance premium increase without proper notice, or you believe that someone made false statements to you in connection with the sale of insurance or the processing of your claim, and as well as any other overcharging you for services, including premium finance charges. That means, for the most part, that is a situation where someone had to pay a premium upfront, and then they're making payments essentially on that premium. And so I'm just going to go into this review of Medicare just so you understand the difference, more or less the difference between the Medicare Advantage plan and the Medicare supplement, but kind of like how it all fits together. And so you probably know what Medicare is. Medicare is government-sponsored health insurance for seniors 65 and older, as well as younger adults with a disability. Created in 1965 and expanded in 1972 to include people under 65. And the Medicare Modernization Act of 2003 is what established Part D, Medicare Part D. So who is eligible? U.S. citizens 65 and older with sufficient quarters of work credit under Social Security, and adults under 65 with disabilities. And I'm not going to read everything on every page, but I did send a copy over. And if you do want a copy of this presentation, I sent it to you, Rich and Dottie. And so Medicare Part A, that is hospital insurance that is funded by payroll tax. And most people don't pay a premium for Medicare Part A. You already paid that. And so that is the hospital insurance. That's the part of the big picture of Medicare that pays for most of the costs of your hospitalizations. So Medicare Part B, that's referred to as outpatient insurance. Part A and B together are sometimes referred to as traditional Medicare or original Medicare. So you might hear that, traditional Medicare, original Medicare. That basically means not Medicare Advantage. That's another way of thinking about it. So if you have a Medicare Advantage plan, that's not traditional Medicare or original Medicare. And again, Part B is funded by the premiums. Most of you probably know about that, and as well as general revenues from the federal government. So it's not just premiums alone that are funding Part B, and it covers the doctor's services, et cetera. And if someone does not enroll in Medicare Part B, when they are eligible, they very likely will receive a penalty when they do enroll, and that penalty follows you for the rest of your life, for the rest of the time that you're in Medicare Part B. Yeah, it's permanent every month. All right, so Part C. Part C is the same as saying the Medicare Advantage plan. And so Medicare Advantage plans are offered by private companies under a contract with Medicare to provide Parts A and B coverage. They may offer Part D, and in Maryland, they almost always do. So in Maryland, it's all bundled together. You have your A and your B and your D, and then what would be considered kind of the supplement. So A and B together covers about 80% of your costs. And that's where you, for the rest of the 20%, that's where you get a Advantage plan or a Medicare supplement plan, or you qualified for Medicaid or QIMBY. So if you're lower income, you may qualify for some assistance. So you have A and B, and then you have your assistance as well. And then for another group of people, you get that 20% approximately, that stuff that isn't covered under A and B. You may get that covered through a retiree plan. So there's 4 ways: the Medicare Advantage plan, which kind of bundles everything together, and the Medicare supplement, where you have A and B and you purchase the Medicare supplement separately, financial assistance, or a retiree plan. So there's 4 different paths, and I think that's why it can get really confusing. With the Part C, with the Medicare Advantage plans, you see these commercials, and this is the entity that's offering the additional coverages. Okay. So they're not just covering that 20% that A and B doesn't cover, but they might say, hey, we're going to give you some vision coverage. We're going to give you some dental services coverage, or maybe we're going to offer like a gym membership plan, things like that. Then you're likely hearing a commercial for a Medicare Advantage plan. You still pay the Part B premium. If you enroll in a Medicare Advantage plan, you pay the premium for the Medicare Advantage plan, as well as you continue to pay the Part B premium. This is in most cases because there are a lot of people who don't pay the Part B premium because they get financial assistance that covers that. And that's through programs called Quimby and Slimby. And so for the most part, the patient pays the Part B premium. And the Medicare Advantage plans, there's going to be a premium, and then there's also going to be deductibles and copays, and that all varies by plan. And that can vary greatly by plan. So maybe you have a $20 copay. When you see a specialist, maybe you have a $50 copay when you see a specialist. It really varies greatly from company to company. And so just be aware of it and make sure that you know what those additional costs are. And make sure that you spend some time looking at them. And I would say especially make sure that you look at what the cost per day is for hospitalization. Because for the most part, the Part C Medicare Advantage plans, they do, there's usually maybe $100 a day for the first, I think it's for the first several days, 9 or 10 or 12 days. It might be $50. It might be $100 a day. It might be $200 or $300 a day. Just be aware if you sign up for one, what you're signing up for. And Part D, that's your drug coverage. That's your medication coverage. Again, with C, it's usually bundled all together. If you purchase the Medicare supplement, you're going to have to purchase a Medicare Part D plan as well. If you're a person getting assistance, then you likely are getting assistance with Part D as well. And if you're a person who's getting your coverage through a retiree plan, for the most part, they do tend to cover your drug costs, although more and more of them are spinning that off and having you still purchase a Medicare Part D plan. So that is just going to depend on how that plan is designed. And then if you do have a Part D plan, you probably already know October 15th to December 7th, that's open enrollment, and that's when you're encouraged to check the formulary, make sure that you have the drug coverage that you need for the upcoming year, make sure that those costs make sense to you, and if they don't, switch a plan. You can switch. There's no underwriting or anything. You can switch your Part D plan to another one during open enrollment. And I'm going to talk about the Medicare supplement now for a minute. So the Maryland Insurance Administration, of all the parts of Medicare, only the Medicare supplement fully falls under our jurisdiction. And again, so the Advantage plans don't so much fall under our jurisdiction. If you can certainly file a complaint with us against an agent. But with the Medicare supplements, that does fall under our jurisdiction. The Medicare supplements are you carry your red, white, and blue card, you have Medicare A and B, and then you purchase a Medicare supplement to cover the 20%. And there's no cost sharing for Part D. You still have to purchase a Part D plan. And so it's purchased from a private insurance company. There's 12 standard plans in Maryland. And there's no open enrollment period. So in a way, you can switch your Medicare supplement plan whenever you want, theoretically, but you can also be underwritten. And so outside of the first 6 months that you're eligible for Medicare, when you have a guaranteed issue to purchase whichever one of the Medicare supplements you want, outside of that, you can be underwritten. So whereas you can switch, again, someone's ability to switch certainly depends on their health situation. So how are the Medicare supplement plans different than the Medicare Advantage plans? Because for people who don't qualify for financial assistance and don't have a retiree policy, they're the ones out there trying to decide, do I go Medicare Advantage or do I go Medicare supplement? With the Medicare Advantage plans, you tend to have a lower monthly premium than the Medicare supplements. The premium tends to be lower, but your out-of-pocket expenses tend to be higher. So it's like the unpredictable part, the out-of-pocket expenses, essentially. You know, you don't know necessarily how often you're going to go to the doctor the next year, and you don't know if you're going to have a hospitalization. You know, so you may not be able to predict what those out-of-pocket expenses are. And so that's just something to think about. So with the Medicare supplements, a higher premium, less out-of-pocket expenses. With the Medicare Advantage plans, in general, lower premium, higher out-of-pocket expenses. And then with the Medicare Advantage plans, you may get those extra bells and whistles. So you may get some dental and you may get some vision. And it's really unlikely that you're going to be getting that with the Medicare supplement plans. All they're going to be doing is paying. So if Medicare Part B paid 80%, they're going to come in and they're going to cover that 20%, for example. So it's standardized. Right now, the G plan, it's a popular plan. A G is a G is a G. You go to a different company, it's the same plan. So when you're shopping, you need to look at the rates. A G offers the same benefits no matter which company you choose. An F offers the same benefits no matter which company you choose. Plan F is only available any longer to those who were eligible for Medicare before January 1st of 2020. So if you were eligible for Medicare after January 1st, 2020, can't purchase an F plan. You also can't purchase a C plan. That's just an FYI. If you were eligible beforehand and you don't have an F and you want an F, you can still purchase it. But for those people eligible after January 1st, 2020, the F and the C are no longer available to them. So here's a couple of frequently asked questions. Is Medicare supplement, this to make it even a little bit more confusing, is Medicare supplement the same as Medigap? Yep, it's the same thing. So not only is it, confusing, is it a Medicare Advantage? Is it Medicare supplement? But Medicare supplement uses two names. Some people say Medigap, some people say Medicare supplement. Medigap, Medicare supplement, they're the same thing. And then, do the Medicare supplement plans cover prescription drugs? So the answer to that is no. However, there are some plans that are available that were sold a while ago before 2006 that do include prescription drug coverage. Can I be medically underwritten when I apply for a Medicare supplement policy? You can be medically underwritten if you are outside of your 6-month guarantee issue period and you don't have, there are some exceptions where you can get an additional 63 days. Let's say that you get your supplement through the company that you retired from, and they go bankrupt and that goes away. That's going to give you a 63-day guarantee issue period into the Medicare supplement. It's only 63 days, so it's not 6 months like it is with your initial period, but it is available. It is available for situations where the company that you are already with has left, or situations where you move and things like that. So there are other ways to get a guarantee issue, but for the most part, most people take advantage of it in that first 6 months. And these are the standardized plans, and I'm not going to get into that too much. We have, time flies. We have a lot to talk about. I am just going to skip right over here to this. For any of you or, friends, family, you speak to somebody who is just transitioning onto Medicare or wants to change their Medicare supplement, we publish this monthly premiums for the Medicare supplement policies. This is available on our website, and it shows every company that offers the Medicare supplement, every letter plan that they offer. So if they're a company that offers, C, F, and G, that's what will be listed, as well as their rates, and it's shown monthly, and it's updated twice a year. So we keep this updated. It is a big book because there are a lot of companies that offer the Medicare supplement. And so just remember, an F is an F is an F, a G is a G is a G, and you're looking at the prices. Of course, you might have a loyalty to one company over the other, and you can certainly have that, and you can certainly have your reasons for believing in one of the insurance companies over the other. But just FYI. So this is available. It is, I think at this point, it is well over 100 pages long. You can look at it on our website, or you can call us, and we are happy to snail mail you out your very own copy as well. This is what it looks like in the inside. So this is a company, we're the regulator. I took their name off of this. So it doesn't look like I have any insurance preference, but this is just one random company, and this is kind of how it looks. So you'll see the A, B, F, G, and then the different rates. And we show the rates in 5-year increments here from under 65 and then from 65 to 85. We have to have some parameters to keep it from not being a million pages long. And then this I won't get into too much. Just know that it's in here. If you are shopping for the Medicare supplement, or somebody that you care about or want to educate they may want to pay attention to this issue age, attained age, and community rated part. And I won't spend too much time getting into this, but know that you can contact me if you want to understand it more. So I'm going to talk a little bit about long-term care and long-term care insurance. So what is long-term care? So individuals with a prolonged illness, a disability, or a cognitive condition often need help with activities of daily living, as well as perhaps needing skilled medical attention. And so long-term, that's what long-term care services are. That might be delivered in an assisted living facility, at home, or in a nursing home. This part, I'm not only going to talk about long-term care insurance. I mean, most people know long-term care insurance is a product. It's an insurance product to help you pay for this kind of care if and when you need it. For the most part, it's not covered. Long-term care is not covered under Medicare. You can get a small amount of care after certain hospitalization situations, but for the most part, it is not covered. That said, long-term care insurance does not make sense for everyone. And there are other options for long-term care. This is the hard reality, is how much does long-term care cost? And $225 a day, or about $6,800 for a semi-private room in a nursing home, $253 a day, or $7,600 for a private room in a nursing home. So, this is the nursing home situation. This is kind of the worst case scenario in terms of cost situation, but it's a lot of money. So we get, what can I do to pay for long-term care costs? A lot of people do think it's just long-term care insurance, and a lot of people, for various reasons, long-term care insurance doesn't make sense to them. One of those reasons could be that they don't qualify. If you already have a situation that is most likely going to lead to you needing long-term care, you will not be sold a long-term care insurance policy. And so, sometimes someone is diagnosed with an illness before they've even considered long-term care, or, just have even considered it. And so they're already not qualified, unfortunately. And some people just simply can't pay for it because it is not an inexpensive insurance product. So again, on our webpage and here, we just talk about other ways that people can pay for it. Such as annuities, reverse mortgages, selling certain assets, certain life insurance policies that were potentially already in place. And then, of course, we will talk about long-term care insurance itself. If you are interested in long-term care insurance, or you have long-term care insurance and you want to understand your policy better, I do recommend A Shopper's Guide to Long-Term Care Insurance. It is really well written. It's well written. It is a big book. It is a lot of reading, but they do a really, really good job of explaining the product itself. If you want to know more about the long-term care insurance partnership program, please reach out to me for information, and I'm happy to talk to you one-on-one about that. I'm not going to spend too much time talking about it here, but it is available for certain policies that are purchased in Maryland to protect your assets in case you actually use up your long-term care insurance policy. So basically, you use it up, and it protects assets that you have. Does Medicare pay for your long-term care? So it's limited. Does your Medicare supplement pay for your long-term care? Again, not really. It's limited. Does Medicare pay for long-term care? Well, yes. Medicaid pays for a high percentage of long-term care patients in the United States, but you have to satisfy eligibility requirements. And so most people understand that is a spend down type situation, where people end up really not having a lot of assets of their own anymore. So what does long-term care insurance pay for? Long-term care insurance policies or long-term care insurance riders to life insurance policies, they're going to cover long-term care expenses that are not traditionally covered by health insurance. So, the activities of daily living situation, there would be, after you're unable to do a certain number of activities of daily living, then your long-term care insurance would potentially go into effect, and it would cover you in those situations. If you are interested in a long-term care insurance policy, make sure that you understand the deductible. Make sure that you understand the period of time that lapses before the long-term care insurance kicks in. And in some cases, that is 90 days. And so it's not something to be taken lightly, because if that meant 90 days in a nursing home, I mean, you could be looking at basically a $20,000 deductible. And so just make sure that you really understand what you're purchasing. And that Shopper's Guide to Long-Term Care Insurance does a really good job. And by the way, if you have any questions, please put them in the chat. Should I buy long-term care insurance or long-term care insurance rider? Again, like, this is a very, very individualized question. And largely because it's long-term care insurance policies are not cheap. Long-term care insurance riders can make some sense for some people, and that's going to be a set amount. So say you have a whole life insurance policy and it has a $200,000 rider for long-term care insurance, then that's $200,000 that you have for long-term care insurance, for long-term care coverage. long-term care insurance policies are going to be structured a little bit different. They're generally structured where you have 2 years or 3 years or 5 years of coverage with a maximum per day. Older policies, some people have unlimited coverage, but you wouldn't find that now. For the most part, you're going to find those 2 and 3 year policies now. And so what questions should I ask before buying a long-term care insurance or a rider? I'm not gonna read all of these, but you do want to know what type of care is covered. You want to know about that waiting period. That's really important. You want to know what happens if you're late paying the premium. Make sure that it's set up so that the premium continues to be paid. However, it would be suspended if you were actually using the product itself. Find out the maximum number of days, and again, like I would say, get a copy of this presentation and go to our webpage. And if it's something that you're interested in, make sure you have your ducks in a row with regards to the questions that you want to ask your broker or agent, because it's not a decision to be taken lightly. It's also something that you want to make sure that you can afford for the long haul, because you don't want to be in a situation where you could afford your long-term care insurance policy for the first 10 years, and then you unfortunately have to drop it, and you never really got to use it at all, and you wouldn't get anything back from the policy for the most part. There may be some exceptions to that, but for the most part, you wouldn't get anything back. Your premiums can go up with long-term care insurance. They can come to us. They come to us and they can ask for a rate increase. They can't ask for more than 15% in a 12-month period, but that's still a lot. 15% is a lot. And if they can justify it, then there's a good chance that we will approve it. They have to justify rate increases. They can't just say, hey, we want to make more money. But if they say, hey, our claims weren't what we anticipated, then there's a good chance that we will approve their rate increases. And it can be up to 15% per year. And again, I won't get into this too much, but when long-term care insurance policies do have rate increases, then the law requires them to offer you some provisions. Like, so no, I want to keep my rate what it is now. And in that case, you may have the option of things that you don't want to do, but they're options. Reducing the maximum benefit, reducing the daily, weekly, or monthly benefit. That's what they're required to offer you by law. And then, and oftentimes they offer other things as well. All right. So let me just step right out of that long-term care insurance world. And that's always a really hard topic. Like, there's no long-term care insurance in the United States is very expensive. So the Maryland Insurance Administration has asked me to emphasize disaster preparedness when I speak to senior groups right now. And so I have added these slides in as well. So we're going to talk a little bit about disaster preparedness. All right. I can't really say climate change, but maybe the climate's changing a little bit. And maybe we're seeing more storms. We're definitely seeing some more wild weather. And with all the wild weather, you got to start thinking more about certain things that maybe you didn't think about before. And so, yeah, the chances that for example, the chances that a tree is going to fall on your car have unfortunately increased. Things like that are more likely. And so this is just my way of saying, hey, you may want to have comprehensive coverage on your car. So if you drive a vehicle that you have full coverage on, full coverage includes liability, comprehensive, and collision. So liability is what you have to put your car on the road in Maryland by law. You have to have liability. You have to protect the other people on the road. If you finance your car, you have to have the others. The lender is going to make sure that you have comprehensive and that you have collision. But if you don't finance your vehicle, it's up to you to decide whether or not you want those things. And so in a lot of cases, people choose to go without collision and comprehensive. And I'm not here to say that that is rational or irrational. It makes sense for certain people in certain situations. So if your car is 15 years old and it's not really worth much anymore, you might say, hey, canceling the collision part, canceling the comprehensive, fine. The collision covers your vehicle. If you were to cause an accident, it'll cover what your vehicle was worth. And the comprehensive covers you if something were to happen to your vehicle, like it were in a flood, or if it were stolen, if it were vandalized, if a tree fell on it, if you struck an animal, things like that are covered under comprehensive, not collision. And you can add comprehensive onto your car without adding collision. So just FYI, most people don't think of them as separate entities, but they are, and you can have one without the other. Homeowners insurance coverage. Obviously, homeowners insurance claims are, with regards to natural disasters, are becoming more common. It's important to review your policy so you know. It's important to review your homeowners insurance policy so you know what's covered and so you know what's excluded. We do recommend that you review your homeowners insurance policy and make sure that you have the coverage that you need that makes sense for you. Do you have a lot of trees? You may want to review your coverage for debris and tree removal. Windstorm damage is now it's kind of almost like a whole different animal with regards to deductibles. And so I'm going to talk to you about that real quick. With homeowners insurance, you have a deductible. And you've probably always known that your homeowners insurance has a deductible. So I'm just going to say you have homeowners insurance and you have $1,000 deductible. So you have a fire, and you can understand that that first $1,000 of responsibility is on you. That's your deductible. In Maryland, you can have 2 deductibles on your homeowners insurance policy. And you need to be aware if you have the second deductible. The second deductible is going to be written as a percentage. So your first deductible is like easy peasy to understand. Say it's $1,000. Okay, you're responsible for that first $1,000. The second deductible is going to be written as a percentage. So I'm going to use 2% as an example. It says 2% for windstorm and hail. It could say 2% for just windstorm. It could say 2% for just hail. It's going to depend on the language in your policy. So here's an example. 2% for windstorm damage. So you have a home that is insured to $400,000. So let's say your home is insured to $400,000 and you have a 2% windstorm deductible. The assumption most people make is that that is 2% of your claim. And it is actually 2% of what your home is insured to. And so in the example of the person whose home is insured to $400,000, that means that their windstorm deductible is $8,000. So it's important that you review your policy and that you know whether or not you have a percentage deductible in your policy. And then if that percentage deductible does not make sense for you, that you shop and that you shop around or make the changes that you need to make. Because if $8,000 isn't something that you could come up with in a situation like a windstorm, then you're going to need to shop for a different policy or talk to them about lowering the percentage, or see what else you can do. Water and sewer backup is an important thing for certain people who are worried about water backing up. Just FYI, the average claim for water and sewer backup is $15,000. In Maryland, when you purchase a homeowner's insurance policy, they have to offer you water and sewer backup as an add-on to your policy. You can say yes or no, but they have to offer it. And so just as an FYI, the average claim is about $15,000. So that just is a little helpful note. Additional living expenses, most homeowners insurance policies have additional living expenses. So that's to pay in case you get displaced and you have to live somewhere else. So do you have enough homeowners insurance coverage? We just recommend that you review your policy, make sure that you have enough coverage to rebuild your home. Talk to your insurance producer, that means agent or broker, about purchasing coverage to protect against inflation. Notify them if you made improvements or additions to your home. And then determine if you need additional coverage for things like antiques, collectibles, and jewelry, because there will be a minimal amount of coverage under a regular policy for that. And so if you're somebody who has a big baseball card collection, or even if you just have a few pieces of nice jewelry, there may not be enough coverage in your homeowner's insurance policy to cover what you have. So it's just something to be aware of. Review your policy, speak to your agent or broker. Know the difference between ACV and RCV. There's a good chance you probably have a policy that has RCV, replacement cost value. What that means is this is the coverage for the things in your home. And this is also for renters. So if you're a renter and you have renter's insurance, all you're covering are your things. If you're a homeowner, you're covering the structure, and you're also covering your things. So replacement cost value means that you get to replace your items with something new. Actual cash value means you get the actual cash value. If you have a table that you bought 10 years ago for $100, maybe it's worth $50 today, so you get $50 from the insurance. The same table that you bought for $100 10 years ago, say it costs $120 new, well, then they're going to replace it with something new. Again, it's important to know the difference between ACV and RCV. Check your policy and make sure that you have what you want. Know what your deductibles are. I already reviewed that. I forgot this slide was coming up. So again, know the deductibles. Know if you have a percentage deductible, know what that percentage deductible is for. So is it for windstorms? Is it for hail? And then what is it? And is this something I can afford? Inventory. It's important to have an inventory of your things. There's some apps for this. You can make a list. You can hand write your list. But I recommend just pictures or video. Just record your house and then store that information in the cloud, or you can print it out and store it in a safety deposit box or something like that. Because if you have an insurance claim, you're going to have to come up with a list. And it's going to be a lot easier to come up with a list if you have pictures or videos than if you're trying to do it from memory. It's basically impossible if you're trying to do it from memory. You're going to forget a lot of things. So as you're going through and you're taking pictures or video, remember to open those closets. Those are things that you're insuring. So you should replace them if something happened. Open closets, open bins where you might be storing things. take a picture. Just make sure that you document everything that you have. You don't have to write it all down. I mean, that would take a while for a lot of people. You may not have a lot of stuff. Maybe it's easy for you. Um, it would certainly be like pretty difficult for a lot of people. And so you can always make that list if something happens. And in this case, you're just taking pictures and filing them away. And you do want to update it, obviously, when you buy something new, or maybe you just want to update it every couple years. So we do recommend that you keep handy your insurance producer's name, program it in that's your agent or your broker, program that in your phone or something like that, and then know how to shut off the gas, electricity, and water, and be prepared to board up vulnerable places around your house. Just know that homeowners insurance doesn't cover you for mudslide, earth movement, that's earthquake. You have to purchase that separately. Groundwater or seepage into your basement, there's no coverage for that. You're not going to, homeowners insurance isn't going to cover that. Flood insurance is not going to cover that. And then under a homeowners insurance policy, you are not covered for flood. Flood insurance is an entirely separate insurance product. And so a flood is defined, a flood is essentially rising waters. So if a pipe were to burst in your home, that's not a flood, for example. So a flooding is rising waters and mud flow as well. So what kind of water damage might be covered by your homeowner's insurance policy? Like I said, pipes bursting, slow leaks are generally not covered. It's important in the winter that you maintain appropriate heat in your home, even if you're going to be away, because if a pipe bursts due to your failure to maintain appropriate heat, the loss may not be covered by your insurance company. And so basically, again, check the terms of your policy if you're a person who leaves for months at a time. If rain enters your home through the roof, that's probably going to get covered under your homeowner's insurance policy, and as well as your doors and windows. So if you purchase flood insurance, most people purchase it from the National Flood Insurance Program, the NFIP. That's 90-some% of the policies that are sold in the US. However, you can purchase them from the private market, and those options are expanding. More and more companies are starting to sell flood insurance on the private market, and a surplus lines carrier as well. So there are other options, but for the most part, people purchase it from the National Flood Insurance Program. This just says there's a 30-day waiting period. You can't just buy it as a storm is coming, as a hurricane is coming. That's all that says. There's a limit to how much coverage you have, and then there's separate coverage. So with flood insurance, you have building coverage, covers the structure, and then you have contents coverage as well. It's actually sold as two separate things. So some people choose just to have the building coverage and not the contents coverage. And if you have a mortgage and you are required to have flood insurance, so people in high risk flood zones are going to be required to have it by their mortgage. Everyone else is going to be on their own to determine whether or not this makes sense for them. In those cases, they're just going to require you to cover the building. They're not particularly necessarily concerned about your contents. They're not theirs. So, and since we are running out of time, I'm gonna go to, this is just a little bit about insurance fraud. So skipping over to insurance fraud, this is just an FYI. Consumers commit insurance fraud and producers commit insurance fraud. So producers being your agents and your brokers. Consumers, in something like an inflated claim,
just an inflated claim is insurance fraud. So somebody's like, well, I have this claim. I'm going to pretend I had these things. But obviously pretending like things were stolen, kind of a common form of insurance fraud. Um, and then staging car accidents is unfortunately a common form of insurance fraud. And with producers and brokers, they can pocket premiums, meaning they took the premium from you and it never made it to the insurance company. Again, we prosecute insurance fraud. We prosecute it civilly. We prosecute it criminally. And according to the Coalition on Insurance Fraud, every household pays approximately $1,000 in additional insurance premiums to offset the costs of insurance fraud every year, every household. And so that just there's a lot of, there is a lot of insurance fraud out there. There's insurance fraud in Medicaid, in Medicare, in health insurance as well. So it takes many forms. Completing a false document. It could be just lying on an application, making a false statement. You can report insurance fraud to us and you do not have to give your name. And so if you suspect someone or an agent or a broker of insurance fraud, you can certainly contact us and you can certainly give us all your information, or you do not have to. And on our YouTube page, there's lots of videos about insurance fraud. We've made some we've taken like the different insurance fraud stories and, made them into little graphic videos to give you an idea of different kinds of insurance fraud. Be wary of telephone sales people who contact you unsolicited, but I feel like you guys probably already know that. Be wary of people who use high pressure tactics such as a last chance deal or like a limited offer. None of this does not belong in the sale of insurance, right? It's no insurance product that you're purchasing. You should be pressured into signing up for it as a last chance deal. You need to have time to review, ask questions, talk to people, and you need to take the time to make the decision that makes sense for you. You don't need to be pressured by anybody. Be wary of somebody who urges you to cash in an annuity or a life insurance policy to buy a new one. That might be perfect for you. It might make perfect sense that you get rid of this old policy and you get a new one. But if it wasn't your idea, be careful, proceed with caution and just know that you can lose a lot of money by doing that. And there may be tax consequences. Proceed with caution if somebody claims to be from Medicare or Social Security or any government agency and they're contacting you unsolicited. For the most part, that's not a real phone call. Be wary of somebody who wants to package a bunch of insurance products and sell them to you as a package. Make sure that you need everything that's in that package. Don't if somebody wants you to pay cash or write a check or money order about paying for your insurance product directly to them, don't do that. Don't sign blank forms or forms that include incomplete information. Don't take somebody up on an offer to sign forms for you. And if you're unsure, if an insurance product makes sense, reach out to anybody that you trust. If you have an accountant or an attorney or a financial advisor, like if that's, if you have that and you are blessed in that way, by all means, reach out to them. But that's not everybody. And in some cases, it might just be, your kid knows more about life insurance than you do, or something like that, or they're more confident reading over those documents. And with emphasis, life insurance, if you're purchasing a new life insurance policy, that can be tricky. So make sure that you understand what you're purchasing. If the price seems too good to be true, just know, maybe it is. And we recommend that you pay by check or credit card. Again, use caution with unsolicited contacts and review your insurance documents. And this is our contact information if you want to report insurance fraud activities. And so that's my spiel. Please go ahead and ask any questions if you have any. And if I did not cover the insurance topic that you wanted to talk about tonight, I am happy to come back and talk to you again about anything else.
And now would be the time to unmute and ask questions. If you asked a question in the chat that hasn't been touched on yet. And I can also read questions from the chat if you didn't see them during the presentation.
Oh, there are chats. Okay.
There's a few.
Okay.
The first one is, can you switch from original Medicare to Medicare Advantage and back to original, or do you need to stay in one mode?
No, you can switch. You can switch in both ways. So you could leave your Medicare supplement policy and you could leave it. Goodbye. I'm going with the Medicare Advantage plan. If you have a Medicare Advantage plan and you want to leave it and go to the Medicare supplement, just know that in that case, you're probably going to be underwritten. But yes, you can switch.
How do the quote unquote free supplemental parts work? What do those plans cover?
The what?
The free supplemental part.
Is that the question? Is that
Brian, if you want to elaborate on your question,
yeah,
might be able to better.
Yeah, can you hear me? I've noticed on television that there are a couple of advertisements that have no copay, no deductible, and it's free supplemental plan. And I'm sitting back going, how in the world do those things work? But they're advertised on TV.
And they're advertised as a Medicare Advantage plan?
It could be an advantage.
Oh, okay. They are. You're right. They probably are advertised. Okay, so I don't see a lot of commercials because I don't watch TV in that way. So if a Medicare supplement plan was advertising that they didn't have any deductibles, yeah, that wouldn't be true, because
it's like you call this number and they'll sign you up for this system where you're covered with additional coverage, but you don't have to pay anymore. And I'm like, this is crazy. I haven't called those numbers, but.
Oh, well, I just put my, I guess I can't answer that because I'm not sure. I just put my email in the chat though. So if you know the company or have more information for me, you can send me an email and I will look into it.
Okay.
But you're right to be suspicious.
I think that those are Medicare Advantage. The advertisements on television for Medicare Advantage rarely ever say that they're Medicare Advantage. They just tell you there's no deductibles and no premiums. And mostly they say, in most cases. So it's not original Medicare. I don't think it's Medicare Advantage.
So it is the Advantage plans. And for the most part, there are Medicare Advantage plans that do not have a premium. Every once in a while, even in Maryland, have I seen that? I think I've seen it before in Maryland. It could definitely be a way that they designed their program. So they could design it without a premium, or they could design it with like a super cheap premium, like $25. I know I've seen $25 in Maryland, but you better believe that that super inexpensive premium comes with higher out-of-pocket costs as well. And they might be saying that they're enrolling people who qualify for some assistance. And so if they're enrolling some of these people that qualify for the QMB programs and things like that, I mean, yeah, they're not going to have any out-of-pocket expenses because they qualify for these programs.
Is that like Medicaid programs?
Yeah, I'm QMB and SLMB, they're similar. They're similar programs. in Maryland, you enroll in them through social services, and I think QMB is funded by the federal government, and I think SLMB might be funded by the state and the federal government. But yeah, in those cases, in a lot of cases, those folks can also elect to join a Medicare Advantage plan, but then they're not going to see out-of-pocket expenses. So that could be who they're marketing to. But a person with, a person who has $3,000 or $4,000, who's living on $3,000 or $4,000 a month is not going to qualify for any of that. Yeah, they're going to be paying a premium in almost all cases, and they're certainly going to see out-of-pocket expenses with the Medicare Advantage plans. Yeah, I don't know what else to say about that. I need to watch more commercials. I'm sure they probably make me really mad.
I wondered if some of those Medicare plans with no premiums and everything are rear end loaded, and as you get older, you start to get premiums and they get a lot higher than the other ones.
No, I mean, it's a lot of the Medicare supplement plans, and I didn't go into that attained age issue age part too much. But if you get an attained age plan, it will go up with age. But it isn't like you're paying, $20 a month now and $1,000 a month when you're 85. Like it's not structured like that. So yeah, I'm sorry I don't have better feedback. I wish I had the commercials to look at.
My observation has been when I've heard those advertisements where they say the premium could be zero or very small, they usually preface it with, and certain people may be qualified. So I think it's some of these special plans, not Medicaid, but what you said.
Yeah. And I believe, and I used to know this when I was with SHIP, but I think the folks who have Medicaid can also enroll in the Medicare Advantage plans as well.
I've got go ahead.
No, sorry, go ahead.
Okay. I've got a question. You made an interesting comment at the end, Patty. You said be wary of people that are packaging a lot of different things together in one insurance policy.
Yeah, sure.
This is going to sound like a sarcastic question. Isn't that really what Medicare Advantage is when you compare it to Medicare Supplement? I mean, Medicare Supplement is pretty straightforward in terms of what it provides, what you pay for it, and what it provides. There's all the plans, A, B, C, D, E, F, and so forth. But it's pretty straightforward. But the Advantage plans are not, I'll just say. They have all kinds of different combinations of gym memberships and drug plans and everything. So the problem I have with the Advantage plans is just that. They bundle a bunch of stuff together, and it would take quite a bit of work to figure out if you're really getting a benefit from it. Do you have any comment on that?
No, not really. I mean, I guess I think you have it figured out, right? They're just, they're trying to make the product look good, and they're trying to get you to sign up for it. And so maybe you wouldn't use that gym membership, or maybe you think you would and you sign up, or that, maybe you don't realize that the dental coverage is only $250, or, it's minimal in some cases, but in some cases it is decent dental insurance. So yeah, it is, it's complicated. It's complicated. Yeah, it is.
So in trying to evaluate differences like that between insurance plans, and this could even apply to things like long-term care coverage, has your agency done any kind of analysis that basically kind of shows for every dollar you pay, on average, this is the number of dollars that you're going to get back as an average insured?
No.
I mean, like I worked for Geico as an example a long time ago, and they had this it was a business practice basically where they said for every dollar we take in premium, we want to pay, I think it was 70 cents in claims and 25% is our cost, and then 5% is profit, something like that. So
Mhm.
that was kind of nice working for the company. I thought, oh, that's actually something that makes sense. But when as somebody that wants to buy insurance, if I'm going to spend $1 on average, how do I know how much I'm going to get out of that dollar?
And are you really focusing this question on the Medicare supplement versus?
Well, it could be any kind of insurance.
I mean, yeah, it's going to be less than $1.
Sure.
And some lines of insurance are more profitable than others. But in terms of, but I mean, in terms of that data, that isn't something that, I mean, and that's going to be something that our actuaries do have access to. So actuaries are the mathematicians that do the risk math, so the
Right.
probability behind insurance, and they're going to be working with those numbers because they're going to be looking at, how much was paid out in claims, and
Yep.
then what part of it's profit, et cetera, et cetera. And so, yeah, that's going to be information that our actuaries are working with all the time, but not necessarily information that we that we post to the public.
So it's not turned around and it's not turned around and provided to the public in a way that you could know, hey, if you buy this policy, on average, you're going to get back this much, the average population.
You may be able to find that information though. And I'm guessing not necessarily for a specific company,
But maybe a type of insurance.
Exactly.
Yeah.
And I don't know if you could find that information on like the National Association of Insurance Commissioners, which is NAIC.org. I mean, if I were looking for that, I might start there. I might just do a Google search to see if there's a site that looks, reputable. That looks like it's somewhat reputable. If it has, a .org or a .gov or something like that. But yeah, I'm thinking that information is available to you in some form out there somewhere.
Okay. I have another question. All homeowner policies include a GL, general liability coverage. But there's also separately offered umbrella liability, which goes on top of both your homeowners and your auto insurance. When is it recommended that someone should purchase an umbrella liability policy, and how do you figure out how much you really need in this litigious society
Yeah,
we live in?
right.
Yeah.
Yeah, I mean, $1 million or $2 million umbrella policies are common. For a lot of us, we can get enough liability insurance through our auto or through our homeowners. Maybe we have $300,000 of liability on our vehicle, $300,000 on our house, and hey, I don't have a lot of savings, that should cover me. You can always have your wages garnished as well. So how much really? I would talk to a financial advisor about that, really. Oh,
Okay.
you mean, I think a lot of people can kind of make a general estimate. They're like, don't want, I've saved a good amount of money and I don't want my wages garnished. So maybe it makes sense for me to get this $2 million umbrella policy and have that extra protection, since it's not that expensive. But then a lot of people who don't really have assets are going to be doing just fine with the liability that is just offered through the regular products. So I guess I'd say a financial advisor would be your best bet.
Okay. On long-term care, is it better for people to start out purchasing that when they're very young?
That's really hard to say. Like when you say very young, I'm guessing
Say in your 20s.
Oh, yeah. Well,
It's cheap. It's cheap, right?
No,
At that point.
It's still not that cheap. But yeah, I mean, certainly somebody selling the long-term care insurance product would certainly tell you, and it's true, a disability like that can happen to anyone. I mean, it can happen to anyone at any time. But for the most part, people don't purchase it in their 20s or 30s or 40s, and
Right.
simply because they can't afford it, right? So I mean,
So it's still expensive even when you're young. Okay.
yeah, and 20-year-olds today in 2021, you know, they have student loans, like the cost of living is, I mean, if they can afford a long-term care insurance policy when they're 25 or 30, that's a brilliant move if you can afford it. I
Yeah.
just unfortunately don't think it's affordable for too many people in their 20s and 30s, but it's, I don't know, it's a hard product to decide when to purchase it. And now I'm starting to think like I'm 44 and I'm like, oh, I should have done this already, and I haven't. So, oh, it's so, I mean, it's stressful. It's yeah, it's a hard topic.
All right, cool. All right.
It
I'll,
is, and
I'll
we're
stop.
really
I'll stop
lucky.
monopolizing here.
Yeah. More questions?
Yes,
Well,
Patricia, I have a
Yeah.
question.
Okay.
Long-term care. Is there anything out there on the books about sharing long-term care if you have spouses where one spouse may have the policy and maybe at some point in time want to share that with the other spouse? Is that possible?
No, they
I
have
know
to,
for the longest time that was not permissible, but I keep hoping that maybe they're going to put something out there that would allow people to share that.
not that I know of. So, yeah, for the most part, you have to be listed on the policy. And I don't know of any other exceptions. I'm not going to say that, I'm not going to say that they don't exist, but not that I know of.
Okay.
Yeah.
do we have any further questions? Well, I think now would be a great time for everyone to just unmute, and I'd like to say thank you so much for your presentation. You offered so much helpful knowledge, and
Thank
you
you.
truly, it's a lot to go through, and you really amazing. So thank you so much.
Thank you.
Thank you.
Thank
Yep.
you.
Yeah, thanks everyone.
It was very
All
interesting.
right.
Very
Yep.
interesting.
Thanks.